name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 13th, 2021, and Bitcoin is still in a downtrend. All right. I'm going to slightly change the format, the way I organize this update, this show. I like to keep it free flowing. I like to keep it unscripted, extemporaneous, but I do want to add a bit of structure. And one of the main reasons for this is I noticed that there are many of you in the community, more and more, that I've noticed that are active traders, right? Some of you trade futures contracts. Some of you trade on margin. A lot of you may even trade those 3x contracts up and down. In any case, although the main purpose of this channel remains educational, right? I am going to share my trade setups. These are not trading calls. Very, very clear. These are not trading calls. If you do it, it's at your own risk. I lose trades all the time, but I win them quite a bit as well, okay? And I try to minimize my losses, and when I lose them, they're not a big deal. When I win them, I win big, okay? So I'm not going to share necessarily all my risk management techniques, because that's completely, up to you. That depends on your portfolio, that depends on, your allocation, your risk appetite, all that stuff. I'm just going to share my setups for educational purposes. All right. That being said, let's get in. High time frame, 4-hourly chart. Bitcoin we're still waiting for Bitcoin to complete our C wave. Okay. We've got our A wave, A, B, C. We've got our B wave, A, B, C. And then we've got our pivot, right? We got our pivot right here. Like, that's how Bitcoin or any asset turns around. You get these pivots, right? These ABC pivot flat corrections. And now our first leg down. Okay, I maintain that this is our first leg down of this 5-wave impulse. All right. So right here, this drop from the top, almost 69, right? Almost exactly 69, down to, where is that? I can't. 62.9. Okay, down to 62.9. This is basically the first drop. And what's happening right now is we are getting something akin to a Wyckoff accumulation. Okay, the second I say Wyckoff, many people think manipulation. Yes and no. Okay, Wyckoff's main thesis was about manipulation, but Wyckoff accumulation, I like to think of it also as just a way for price to settle after a large decrease. Okay, Wyckoff accumulation, Wyckoff distribution, I like to think of as the opposite. Price settles after a large uptrend or a large markup. Okay, so basically this is what I'm seeing here, and it's just very, very steep, very stark downtrend. Now we need to settle. We need to gather. Buyers and sellers are consolidating their orders, right? Market participants right now are deciding what they want to do. Are they staying in the market? Are they leaving the market? This is what this is for me, okay? And if you look at the Wyckoff accumulation pattern, you can see, the same kind of patterns here with the spring. And so this is why I think we're going up, right? Higher time frame, or I guess this is mid time frame, right? Because high time frame, we're going down. We're on a course down. But mid time frame, we're going up. We've got this kind of spring, like I just said, and here's a sign of strength in a bull flag, and then we're going to slowly make our way up. And I believe that we make our way up to the golden pocket. And what's the golden pocket? It's basically, some people say it's between 0.5 and 0.786 fibs. I like to say it's between 0.5 and 0.618, right? Because usually that 618 barrier is quite well respected by price action. Like if you're not supposed to cross the 618, you don't cross the 618. You seldom even wick above the 618. So what I'm seeing is that Bitcoin's going to do, it's almost complete. It's Wyckoff accumulation, and it's going to make its way up out of this trading range, right? This trading range that you see here. No, I'm not even going to draw it out, but you see this. This is the trading range that we've been in for the past few days, for the past almost 3 days, yeah? And when I say Wyckoff accumulation, people say, hey, wait, hold up. This is an Elliott wave channel. I came here to learn Elliott wave. They're basically the same. There's a way to explain Wyckoff accumulation and Wyckoff distribution in terms of Elliott wave, and I'm going to show you right now. In terms of Elliott wave theory, Wyckoff accumulation is essentially just a flat correction, right? And we've seen this before on this channel. You have your price kind of markdown, then you have an A that comes up, and that A is comprised of an ABC, and that C kind of curves up, right, with a diagonal, kind of an ending diagonal in the C. And then you have your B wave, right? And your B wave does this, right? We've seen this before on this channel. Your B waves do something like this, right? So this is what I'm seeing. When I see Wyckoff accumulation, I see ABC correction. That's basically it, right? You have your A, you have your B, which is also made up of an ABC, right? And then your C is your 5 wave up. And this is what I think we're going to get soon, but not just yet, okay? So I hope everybody sees that. I know this is higher time frame for hourly chart. Let's go into the hourly chart to see a little more definition. But do you see what I'm seeing right there? So let's pull out, and this is just rough kind of thing, but you can see these patterns a lot. Your A, counter trend, right? Your B with trend, your C, right? That's your ABC. That's your A. Your A, so in the B wave is basically against the trend. So your A of the B starts against the trend. The B of the B goes counter trend. The C of the B goes with the trend, right? And so I think we're in the C of the B, okay? And we've seen this before again. And finally, you're going to get your C, which is going to be just 5 waves. And in this case, it's going to be 5 waves up, as I said, in the golden pocket. So we can expect C to come to between, on this chart, between 65808 and 66514, okay? So that's what I'm seeing pretty much. And then we can even calculate C by using A, right? Because if we're in B, if we say we're in B, we can calculate C using A rather, not B, A. So if we take, so let's just erase this so we can see, well, let's erase this one. Let's keep that one. And if we say that this is a B wave, right, of this larger correction, and it's a complex correction, right? And so I'm calling it A, B, C. I should call it WXY, right? Because this is a complex correction. That's the designation you use for complex corrections. To measure C, you would take the trend-based fib extension, take the distance of A, the retracement of B, and C should come to the 1, to between the 1 and the 1, 2, 3, 6, okay? But we've all seen C can end as early as the 618. C can go to the 786. So this is what's in the textbooks. 1 to 1236 is the typical retracement for C. Okay, so we don't know. I personally think that C will end closer to the 618, and I'm going to show you why in a moment. Okay, so let's just keep that on there for now. Let's get rid of this. And what do I want to do? Okay, so we have the medium time frame kind of picture. We see that this is most likely a wipe-off accumulation or a big WXY. I call it, a complex correction. Shouldn't be called a WXY, right? Let's be consistent with our appellations. So it would be, if you wanted to label it, the W, which is the ABC flat correction, the X, which is, well, the X would be, the X would be this B wave, right? And then the Y would be your C wave if you wanted to ABC it. Okay, so do you see that? I know that this can be confusing. Complex corrections can be confusing, but you see them more often than not. You see them quite regularly. So it's something that is worthwhile to learn and get the hang of, just to give you an idea of what's going on. We saw complex correction. Well, we see complex corrections pretty much all the time, because most of the time price action is in a complex correction, and that takes most of the time, right? All right. So what I want to show you now is, so Bitcoin is in this channel, and if we use the limits of this channel, we can see that it looks like, that was badly drawn. The channel is like more here. Okay. This looks like a bull flag, okay? Descending wedge or bull flag, pick. Either way, super bullish for this kind of structure, okay? Meaning, I'm not saying Bitcoin's going to the moon. I'm saying that this structure indicates a move to the upside, okay? And so going into smaller time frames, let's go into 45-minute. You can see here, you have a consolidation that is, let's increase this. Do you see? You have a bullish consolidation. So although the price action is moving down, you're consolidating, making, like, you're coiling up here, okay? Right there. I hope you guys see that. So that indicates to me that even though price action is going down, we're kind of making higher highs, higher lows, and lower highs, which indicates consolidation. And another thing that indicates consolidation to me is decreasing volume. If we're going down and the volume's decreasing, that means we're consolidating for a move up, right? If volume's confirming the downwards move, then it would be increasing. So we're going down to go up, right? That's pretty much what I'm trying to say. And again, so where will this wedge end? Okay, that's the question, right? So this is where we start our trading kind of tips, trading setup portion of the update. So if you use the Fibonacci retracement tool, and let's say this was 5 waves up, right? We take this all the way down here, and we know that 5 wave structures usually retrace to between the 382 and the 236. So I expect the price, this wedge, to consolidate down to at least the 382, right? Which is right here on Bitstamp 63139, okay? And I don't know if this is even worth, right, a trade, because it's just so little reward, and then the risk is too high. So the risk reward ratio doesn't really make sense. So I wouldn't necessarily take this short at this point in time. If you had perceive this up here, yeah, sure. But right at this point, I think it's best to just wait until we get this reversal and this move, right? If this is a descent, if this is a bull pennant or a descending wedge, the target should be, and so I think it's going to come down to the 382, right? Let's just put a line there to remember where the 382 is. Let's see. Okay. And now the target for this would be the length of the flag if this was a pennant, or the flagpole rather. And the breakout would be, I think, around here, right, on our 382, or right around there. And I think it would take us up to 65.5, around there, to the top of this range, right, basically. And that would be the completed two wave, right? Because I think that this is a two wave, a larger two wave of this one wave down. So price is consolidating in a complex correction, and it completes once it comes back up here to the top of the range, and then makes its way down to the three wave, the larger three wave of this C wave. I hope that makes sense. So this is pretty much my larger trade. So right now, I'm currently in that short, and I'm shorting it down to the 382, going to take profit, and then I'm going to long up here. Where have I hidden my stops? Okay. And that's important too. When you're talking trading, you always have to talk stop losses. So for that, go into smaller time frames, 15 minutes, right? And what I'm seeing here is another complex correction in this wedge, right? What I see is we did our pivot, right? So this is A, B, and C started the downtrend, right? So 5 waves up, A, B, C is the first wave of this correction. And we have A, B, C, right? You see that sort of ending diagonal C, right? Then you have, so this is W, right? And then this is X. And then this is the second, I think this is a double tree. So this is A, I think we're in the B wave right now, and we're just entering the C wave. So A, B, C, right? If this is a regular ABC correction, if this is a zigzag, which it looks like right here, if the second of the double three is a zigzag, and just looking at price action, we've seen a lot of resistance here. I'm going to take my fibs from the top of this A wave to the bottom. And once again, I'm going to hide my stops behind the 618. I do this all the time. And another reason why that makes sense to me, why it's not a flat correction and it's a zigzag correction, is one, because the B wave came up within between the 0.5 and the 618 and didn't breach the 618. And secondly, I have this line of resistance here that price action's been respecting, right? This descending wedge. So if I put my stops behind the 618, I feel like I'm safe in this this setup, right? So I'm safely kind of stopped out here, or kind of stopped here, and then I just track it down, take my profit, right? So that's my setup. That's pretty much what I'm doing. And lastly, let's use the vital algo indicator just to confirm things. You just use indicator as confirmation of your setups. And on the 15-minute time frame, just give it a second to load. Let's actually go on the larger time frame. Can't see anything on the 15-minute. So vital algo is showing us that any second now. Okay, we do have some buy pressure down here. So even below the 382, maybe around the 236. And we have been in a strong downtrend ever since here. So that's pretty much what I'm seeing with the indicator. You can go on smaller time frames and see other things. Hope that was helpful. Hope that was useful. Like, share, subscribe, and I'll see you guys soon. Bye.